Welcome back to the Crypto's Key conversation. We're going to start with this one from Stefan Huber here. It says, this was 6 years ago. The fascinating thing is that XRP is the only coin that can keep the same price and still stay in the top 10. So if you come over here, you can see XRP is labeled as Ripple. Not too many people know about this, obviously, because they're newer investors. But if you look at this top 10 here, look at Ripple right here sitting at 36 cents, and it's in the number 2 spot above Ethereum. This was a big turning point. This was a big no-no in regards to the Bitcoin and Ethereum maxis, especially when it came to that whole Ethereum free pass and the obvious blatant corruption and them trying to get, as we say, the regulatory free pass to kind of give them an edge on the market. Shameful, man. But yeah, I like that he had put this up. It's just a good reminder of kind of where we came from. It's crazy that, obviously XRP is not Ripple. Ripple's the company. XRP is the digital assets. It's crazy how XRP is still literally within this range and is still in the top 10, even despite an SEC lawsuit. It's crazy. Not too many digital assets would be like that. This is from James K. Fallon, and shout out James K. Fallon for all the great work. It says, John Deaton has filed a motion to file an amicus brief in the Zakino versus Ripple in California. I butcher that name every time. But here you go. As you can see, John Deaton constantly on the prowl, constantly moving and trying to fight the good fight. So shout out John Deaton. This is from Crypto Law. This is John Deaton stuff here. It says, Gary Gensler, SEC is not regulating crypto. It's extorting companies and projects for fines while massive frauds are not being prevented. U.S. residents can use our app to demand Congress to take action now. So, obviously do your due diligence and do what you got to do to get involved and help fight the good fight. It seems like, we may not be making much dents or have much effect on what's going on, but from the sounds of, the attorneys and lawyers that we have within our community, I mean, our fight is making some noise and it's continuing to gain traction and strength. So we got to keep doing what we can do on our part in regards of kind of helping this space not get overtaken by the likes of the SEC and the incumbents. Moving on right here. This is former SEC branch chief Lisa. It says, excellent points made by Commissioner Hester Pierce in her dissent from the SEC authorization of settlement with Kraken. Why does SEC refuse to provide guidance to crypto industry and wait years to claim staking or lending offerings as fraudulent? So there's a lot of people kind of frustrated. Obviously, what Hester Pierce said in her memo, whatever you call those things, is great. I'm glad she's calling out the chairman and the actions of the SEC, but it's like, okay, at what point do we get more than just words or a letter or a memo or whatever it is? Like, at what point do we get more? When's that new day coming? That's the frustration that's coming from the community, because as you can see, there's thousands and thousands of investors that utilize Kraken to earn yield, staking their digital assets, and now they're hurt. Their income is hurt. Their livelihood and their financial goals are hurt from it. The SEC is supposed to be protecting investors, right? It's clear that they can care less. Why would you take the abilities of the people you're set out to serve, you're in their position to protect them. Why would you take their ability to earn more income for something that they're already investing in? They're already taking the risk themselves. They've already paid their taxes. Why can't they invest in what they want to invest in and utilize that to generate their more income? It ain't no different from, buying a house, a commodity, buying a house and, renting it out and earning, income off of it gaining value in the likes, even when it comes to just investing in other commodities as well. Obviously, the chairman's trying to make and classify the entire crypto space under the securities laws. Shameful, but it is what it is. We're going to continue on here. This is from Representative Bill Huizenga. Says, since Gary Gensler won't abide by his own policies to, quote, come in and talk, the House of GOP will hold him accountable. Today, as promised, our oversight of the SEC begins with a request for documents surrounding their interactions with Sam Bankman-Fried, FTX, and the Justice Department. So then he put up, I think this is a letter signed here. So, more pressure being applied from all angles, which is huge. Look at this, 1 million views, and this was posted at 8 a.m. This is huge. And speaking of Sam Bankman-Fried, I wanted to bring this up. Where's it at? Tony Edward. He had put up a great point here. He goes, hey, Sam Bankman-Fried, or SBF, you have a chance to redeem yourself a bit. Expose Gary Gensler and SEC and what they were planning to do with FTX. The ball's in your court. So I thought this was pretty intriguing, because it's like, could Sam Bankman-Fried and, and the like work out some kind of deal to, hey, we'll give you information on this corruptness, for, light sentences or this or that. I'm really curious to see if that's something that can be possible. Who knows? Obviously, there's bigger players involved. This may not be a reality, but I thought it was a good tweet to kind of, or I guess a good conversation starter here, and I wanted to put that on here, and it kind of ties in with what we were just covering here. So we'll see as things go forward if we get the information based on what Gensler was doing behind closed doors with this fraudster. We'll see. This video and this interview, I mean, it sparked just so much hatred and pain and anger. And we're going to watch this about 4 minutes long. And this is Chairman Gensler just talking out of his butt. And Jesse Powell and Jeremy Hogan have some great tweets to go along with it. So let's take a quick listen into this, and hopefully we don't get the ads.
First now to end its crypto staking program in the U.S. and pay a $30 million fine to settle charges from the SEC. The agency said Kraken had failed to register the program whereby investors earn a yield in return for locking up their tokens and allowing them to be used to facilitate transactions on the blockchain. It's the SEC's first crackdown on staking. And joining us right now is SEC Chair Gary Gensler. We should say Bitcoin and pretty much all the cryptocurrencies are down on the back of this news. Chair Gensler, it's great to see you this morning. There's a phrase online where they say, "Tell it to me like I'm 5." So for those who are uninitiated into what happened here, tell it to me like I'm 5. What was Kraken doing, and what was the problem that you were trying to solve?
Andrew, what Kraken was doing was asking the American public for their coins, crypto tokens, and saying, I'll give you a return, 4% to 21% returns. And the problem was they were not disclosing to the investing public the risk that the investing public was entering into. And we have a basic bargain in the United States since the 1930s. You can take whatever risks you want. Companies like Kraken can offer investment contracts and investment schemes, but they have to have full, fair, and truthful disclosure. And this puts the investors who watch your program in a better position. That's our basic bargain. They were not complying with that basic law.
So how does this, though, differ, for example, from some of the other firms out there, including Coinbase, who offer yield products?
Whether you call it, the labels don't matter. Long ago, Supreme Court Justice Marshall said this so eloquently. It's not about the labels. It's about the underlying economics. And this really should put everyone on notice in this marketplace, whether you call it lend, whether you call it earn, whether you call it yield, whether you offer what's called an annual percentage yield, APY, that doesn't matter. If somebody's taking their tokens and transferring it to that platform, the platform controls it. And guess what happens if they go bankrupt? You stand in line at the bankruptcy court. There's a saying in crypto that says, not your keys, not your coins. So those other platforms should take note of this and seek to come into compliance, do the proper disclosures and registration and the like.
Okay, but here's one of the big issues, as I think you know, which is this staking service is going to no longer be available to customers in the U.S. But interestingly, they're going to still offer the same product internationally, abroad, outside of the United States. And so it raises this larger policy question as to whether crypto, these types of products just move offshore. Maybe that's what you want, and that's a good thing. But then whether what you do about the American citizenry who's then using VPNs and all sorts of other things to skirt around what's happening here.
Look, we're technology neutral at the SEC, but we're clearly very focused on investor protection. 330 million Americans are our clients. These firms, Kraken knew how to register. Others know how to register. It's just a form on our website. They can come in, talk to our talented people in disclosure review teams. And if they want to offer staking, we're neutral. Come in, register, because investors need that disclosure. What are you doing with the tokens? Are you trading against the tokens? Are you borrowing against the token? Are you using them for your own purposes? And we've seen this in the crypto field. So investors not only need that disclosure.
So there's a lot. I don't know if that's going to be copyrighted. So obviously I didn't want to talk through it just in case it is, but I'm going to talk now. So hopefully it's not copyrighted and you saw the video if you haven't seen it. But there's a few things that I wanted to point out that I thought was interesting. So he's saying labels don't matter, right? And I think he was saying Thurgood Marshall or saying the underlying economics matter, right? So remember, he said, I don't care if it's staking, earn, lend, yield, APY. It doesn't matter. It doesn't matter what you label it. It is what it is, and it is what classifies, the underlying asset, or I guess you could say the platform doing what they're doing in regards of staking and offering, saying, hey, you onboard your assets and I will give you this return if you stake. So that's pretty much what he's saying, right? Let me see if I got it on here. So look at this. It says, the largest staker of ETH is Lido, with 31% of all stake Ether. Lido is backed by Andreessen Horowitz, A16Z, Paradigm, Fred Ersham, Dragonfly Capital, Consensus Investor. So if we come down here, he highlighted this segment here. It says, starting today with the expectation of staked ETH, assets enrolled in on-chain staking program by U.S. clients will automatically be unstaked and will no longer earn staking rewards. So the reason why I'm putting this up here is because this is interesting, because it brings into the conversation of ETH again. So in this interview, he literally just said, it doesn't matter what you say. Literally, we just talked about it in 2 videos ago. Joe Lubin literally talking about all these specific words. It wasn't just in video, it's on written down as in verbiage. He said lend, earn, yield, talking about all these different things, right? But it's like, why is Chairman Gensler going after, first of all, he's going after these platforms, but couldn't go after the fraudulent stuff of, Celsius, Voyager, Do Kwon, and the Terra Luna stuff, having closed door meetings with Sam Bankman-Fried and FTX. I mean, why is it certain you're picking and choosing winners and losers from the, off the top? Why is it that you're not holding the same standard to everyone is the big question, especially if you're saying labels don't matter, right? Anyways, we can keep going on and on about that contradictory statement that he makes, but then he goes, you got these platforms that, you onboard your assets and then, those platforms go under and then you have bankruptcies. And it's like, okay, well, you're talking about these platforms going under. Like, if you applied the law, first of all, if you had clear regulations and rules that people can follow and abide by, maybe we can, avoid a lot of this. But you're not holding the same standard that you so-called are trying to hold against certain players across the board. That's problematic. And you say you have 330 million investors to protect, right? And that's your primary goal. You're saying you're tech neutral and you're focused on primarily on protecting investors, right? Those 330 million investors that you're set out to protect don't want your protection because you're not helping them. You're only hurting their financial goals. We are grown adults that pay our taxes and want to invest our money where we like. We would like to delegate and utilize and put our digital assets to work to earn yields and earn, money off of our money. That's the goal. We don't want to leave all of it in a bank to earn 0.001%. But no, you're trying to protect us. No, you're trying to keep us from changing the financial course of our life, acting as if we're your babies. That's the problem. And then the gentleman has said, obviously, Americans may not be able to, stake on these platforms, but they're still offering it to, international customers. And what happens if, our people go offshores and they use VPNs to try to skirt around things? And it's like, oh, we're tech neutral and we have to protect. It's like, no. That's not what you're doing. And that's a real thing. People are going to go around it. I mean, whether they leave, whether they try to use VPNs and get around things, whatever they got to do to kind of stay involved with this new emerging technology. And then you say, just come in and talk to us and come into compliance and do all these things. But it's like, no, you literally just drop the hammer. You don't even, people that try to come in and have conversations with you, it's clear all you do is gain information on them. And then you try to attack them with it. Case in point, Ripple, the digital asset XRP, right? What about even Coinbase? When they were trying to set out their lend, they were trying to have conversations and you didn't even want to have those conversations. And you try to just drop, hey, if you open this lend, or I forgot what it was called, earn or whatever it was called, on your platform, we're coming after you. That come in and talk stuff is just a scam. And that whole we're here to protect investors, that's the most sickening thing that comes out of his mouth. Jesse Powell had a kind of funny yet sad tweet here. Says, oh man, all I had to do was fill out a form on a website and tell people that staking rewards come from staking. Wish I seen this video before I paid 30 million fine and agreeing to permanently shut down the service in the US. How dumb do I look? Gosh. And he says gaslighting. Literally, Jeremy Gensler's gaslighting. Right here, Jeremy Hogan says, tell me if I should laugh or cry. I'm undecided. So then I thought this was hilarious, right? Well, first of all, let me read this. It says, it's from Ripple Van Winkle. I usually do both. First laugh, then cry, then laugh at myself for crying. It works wonders, sir. And then he come down here. This is a perfect example. I mean, it's not funny, but it is. There's got to be some humor in this chaos. This is crazy. I already covered those two. So coming over here, who's next? So this goes in line with what I was saying about, Chairman Gensler's talking about lend, earn, yield, APY, staking. It's all underlying economics, right? It doesn't matter about the labels, right? And then Mr. Intuitive Truman's only says, Ethereum Alliance and Consensus, ETH ICO, who's next? I mean, gosh, I'm going to end on this one. I thought this was a great video that Digital Asset Investor I put up. It says, Congress, if you want to put America back on the right track, fire Gary Gensler and hire Tim Draper as SEC chairman. The founders are rolling over in their graves watching this disaster of a corrupt government we have. Let's finish this 2-minute clip and then we're going to get out of here.
My best example is Korea, because Korea was split in half. There was North Korea and South Korea. North Korea had a government that decided to control everybody and tell everybody what to do, and they were, Marxist, socialist, communist group, and all those people worked along that program. In South Korea, they set people free. They trusted them. They built a democracy. They were capitalistic. They were free market, open borders. And today, it's been 70 years. Today, the average South Korean now makes 460 times what the average North Korean makes. And the average South Korean is now 4 inches taller than the average North Korean. So it's pretty clear to me that people will thrive if you set them free, if you trust them and set them free. So
literally, I mean, I'm not even going to play the whole clip. That says it right there. That's what we've been talking about. It's like, stop acting like we're babies and chaining us all down. Give us clear guidance, give us the rules, and let this industry flourish. Let innovators innovate, entrepreneurs do their thing, let investors invest their hard-earned money, and let this thing fly. I want to come back to this really quick. So obviously, Mr. Huber here had put this up. This is about 6 years ago. It says Ripple and not XRP. So remember, XRP was in the number 2 spot above Ethereum, right? This is before all the chaos started happening, and then that the whole narrative and agenda of trying to suppress Ripple and XRP came into effect, right? So if we come over here, I'm gonna refresh this. This is CoinGecko. Let me go ahead and refresh this. So we're sitting at 38 cents. So literally 6 years later, we're still at that same range, still in the top 10, even with an SEC lawsuit, right? Mickle had a tweet and it said, the entire crypto industry was silent when Ripple got sued by the SEC. And remember, I was talking about that. I was talking about how now you have people, oh my God, the Chairman Gensler and the SEC are doing A, B, and C, and D, and this is so wrong, and this or that. It's like, okay, well, where were you when XRP community and the likes of John Dean were screaming and shouting from the rooftops like, hey, pay attention. We all need to band together to do this, because it's not just about Ripple and XRP, right? And that's not to just say, oh, since you didn't have our back then, we don't got your back now. That's not what I'm saying. I'm saying it's just shameful that as a community, we couldn't have come together sooner. So hopefully now at this point, we can all come together. And obviously you see people are fighting the good fight, but I'm saying as an industry, we have to realize we're all on the same team against all the shady, corrupts, and conflicts of interest of the government officials that are trying to stifle and hinder innovation, especially within the United States. Going to end on this right here is Bitcoin Fear and Greed Index. We're sitting at a 49 in a neutral spot. So we'll kind of see what happened in the coming days. But that's all I have for you. Make sure you come to the Crypto's Key Conversation YouTube channel. Subscribe. Follow us on Twitter at Crypto's Key 1. I really appreciate your support out there, you guys. With all that being said, stay strong out there and be safe.